Good morning, good morning. How are you? Here I am talking to myself without the microphone on. How you guys doing? It's May 3rd, 2024. Thanks for joining me. So, Euro US dollar, huh? Perfect call. What did I tell you? I told you that the banks were buying, and what took place? A price move to the upside. Are we surprised by that? We shouldn't be surprised, because if the banks are buying, what direction do we think it's going to go? Up. That's it. That's how these markets work, folks. You know, yeah. The media can tell you that the move up happened for whatever reason they want to. The bottom line was the banks were buying, and they used the data as an incentive to help facilitate that move to the upside. And so I'm glad you got a chance to see that exactly as we had forecasted. So today I want to go through some of the assets that we trade. Gold I have up here on the top left hand corner, as you can see. This is an overview of where we're at right now with respect to retail sentiment. So this is what the retail world is thinking about these currency pairs. They're mostly short the euro right now, short the pound, short the Aussie, short the Kiwi. All right. Gold, silver, they're somewhat undecided. They're in the middle right now. As for US CAD, same thing. US dollar, Japanese yen, a little bit surprised. And US Swiss. So all dollar pairs undecided. And that's pretty interesting because if you take a look at what's been happening with those, especially the US dollar, Japanese yen, boy, oh boy. You know, did you see the drop that we got? Did you see the drop in price that we got? What did I tell you? Right? If you've been following us and following our channel and following the analysis that we've been posting and laying out the storyline for you, you would know that the banks needed to take profits on long positions. All right. And so what did I say about this last drive to the upside? I said, be careful, because that last drive to the upside, boy, oh boy, that was a big one. All right. And it looks like they're using that to lure the last bit of retail traders in short. And you can see that's exactly what took place. You know, 78, I think it was up in the 80s up here at one point. And, you know, so they got lured in, then they bailed on those shorts for longs, which was the long positions that the banks had, right? Let's go over quickly to right there. Here we go. Look at that. Look at their long positions. Look at the bank's long positions. They reached 222,000. Okay. That's massive. You see the coloration of the cells, how red they are, how dark red they are. That means they're so super aggressive. They're going to have to do something with that position. So what do you think they're going to do? They only have so much to work with. Based on historical data, the banks only have so much that they can purchase until they have to offload. Okay. And this is not me just coming and plucking this out of the air. This is based on looking at the historical data. I can tell you that for a matter of fact. Okay. So that's why I'm able to predict that there's going to be a drop, because I know what happens when they reach maximum size. They take profits and price tends to drop. So this is what we're seeing now with the price drop. So retail now, they're what? Let's see what they are with the US dollar, Japanese yen, 51% long. Okay. So here we go. 51%. Oh. And let's take a look. I'll show you something really interesting here. 51% long. 51%. Okay. All right. So let's get into US dollar, Japanese yen. And let's look at, this took place on the 25th of April, right? Okay. So let's do Let's include the 25th. There we go. 21, 22. Oh, what's that date? 24. 24. Here we go. All right, so here we go. This goes back to the 24th, which would be 24, give or take around here. Okay. So this is what we can see. So retail traders had a massive short position here. Okay, you can see by the numbers. Okay. All throughout here. What did they do? So as price started to increase, they bailed on those shorts. So who do you think is taking on those shorts? I would have to suspect that it's going to be the banks, and we'll see that when the CFTC data comes out. And lo and behold, what is happening now? Okay, look at their longs increasing. Nothing major yet, but big increase in long positions over the last few days. So this is where we're at with the storyline of price. So reading the news, reading the media, reading all the articles out there, they're going to give you their explanation as to why price is dropping. But the reality is banks are offloading their long positions, okay? It's that simple. They're offloading their long positions, and that's why we're getting this drop in price, okay? So that's what's happening with the US dollar, Japanese yen. US CAD, interesting that they're 56. So basically they're offloading their shorts for longs. Same thing as with the US dollar, Japanese yen. And US Swiss, again, offloading shorts. At the highs, they were 83% short. Okay. So now they're neutral. They're coming to more neutral. Then you look at the euro, pound, Aussie, Kiwi, and you see a massive bias there. You know, not just a little bit of a bias, massive bias. So let's go over to the euro and take a look. Why the massive bias? Well, we recently had some data coming out. We had the ADP employment, which was positive for the US dollar and should have been negative for the euro, but instead we got price to rally up. The rate was unchanged, but we knew that because institutional buying was taking place from here, that the overall pressure was going to be to the upside. And remember, I told you we had price sitting in a range, right? In between institutional demand and institutional supply. So this is the dynamic that's coming into play now. Now, if we have to look at which direction price is likely going to head into, we got data coming out, right? Let me bring that up for you in case you did not know that. I'm sure you do, but in case you don't, this is what we got. Okay, this is what's coming up in 17 minutes. We got non-farm payrolls coming out. So a lot of people like to trade this as well. I'm sure there's a lot of you that like to trade the data, and that's fine. Here's what I'm going to say about this, okay? When it comes to non-farm payrolls, the circumstances were that institutions were buying. My personal bias is that we're going to be seeing a move to the upside. That's my personal bias. But although I have my biases, I also understand certain things about supply, demand, and the dynamics that take place. And I have enough experience to know that when a supply zone is in play, you don't want to be going long. Just my personal experience. When a supply zone is in play, you might as well run away. Okay? Don't go long. My personal experience, all right? It's not a good idea. My bias, my experience, my intuition is telling me price is heading up. Are they going to use non-farm payrolls to do that? Possibly. Or they could just spike down because supply is in play. And then later on, next week, they push price up. Overall, I think by the end of next week, we're going to see price higher than where it's at right now. Okay? And this has been what we've been talking about for some time now. Because this is the overall storyline of price, as I've been saying. Price is on a mission right now, guys. It's on a mission. And it's not going to veer off that path. Okay? When the logic that you apply to the charts is correct, then price will move in the direction that you suspect it will. And so far price is doing pretty much what we thought it would do. And that's because the logic that we're applying is correct. Okay? And you can see it. And we've been following along. And that's one of the beautiful things about looking at the CFTC data, is because it paints a picture. Okay? And the picture takes a while to unfold. It doesn't just happen quickly. It paints a picture. And you can see by looking at the data. Look at net positions. Look how bullish they were back in January, just the beginning of the year. Positive 119,000. Look at where it's at now. It's in the negative. You see the switch? This is how the banks move with their price and their positions. They take time. So you can see slowly shifting to bearishness. And if you know how to incorporate this data into the overall storyline of price, then you know what's likely taking place. You know how long it should take until it, until it plays out. You know, a lot of people were, not a lot, but a couple of people wrote to me and they said, oh, you know, you said the dollar was bearish and yet price is moving up. And I can understand from somebody that's coming new to what we're doing here and not understanding context. I think price was doing this at the time. Okay. I said, be patient. You have to understand the timelines that we're dealing with here. It's not just going to happen today. You know, we don't see the banks accumulating a short and then, you know, within 2 days they make their move. Or a day, you know. Let me show you US dollar, right? So this is what we were looking at. Look at short positions on the US dollar, okay? They're increasing, right? And I said, that's interesting. I want to point that out, that they're increasing their shorts. And so then price rallied up. And so somebody wrote to me and said, well, if they're increasing shorts, why is price rallying up? Well, you know, short term, it's rallying up. Yeah. But you see what's happening now, right? You see the move that eventually took place. So, I think it's got more to drop. You look at the 4-hour chart of the dollar, it's got more to drop. You know, you look to the left, if there isn't any buying taking place from the institutions, then there's going to be more of whatever's been taking place on the charts. Okay, it's pretty much that simple. Unless something new comes into play, you have to assume that what has been taking place and what is currently taking place is going to continue taking place, right? What's that saying? Things in motion will remain in motion. You know what I'm talking about. You know, there are a lot of principles. There are a lot of principles in life. philosophical principles. Oh, this is crazy. I just want to use my browser. Okay, Newton's first law of motion, also known as the law of inertia. Listen to this. Let me bring this to you. Newton's first law of motion, also known as the law of inertia, states that an object at rest stays at rest, and an object in motion stays in motion with the same speed and in the same direction unless acted upon by an unbalanced force. Okay? You hear that? That's big. When it comes to supply and demand and understanding why price is doing what it's doing, understanding that is key. Because you look at price and you have to locate where those forces are that the banks have put into play that will likely come back into play, right? Not every force that the banks create on the charts are going to come into play in a significant way. And that's when things get tricky. A lot of people, they like to draw imbalances everywhere. They say everything is supply and demand. No, not everything is supply and demand. Number one, locating supply and demand is a tricky business. Everybody does it wrong. My opinion. If they did it right, their analysis should be spot on most of the times. If it's not, that means they're not doing it right. I think we've shown that our analysis is usually spot on, high percentage, and that's because the analysis is correct. That's because the zones that we're locating are correct, and what we expect to take place from those zones are very reasonable and in line with what actually takes place, okay? Because like I said, not every zone reacts in a massive way. So the force that comes into play in the market, there's a pressure being built there. It could be from buying, or it could be from taking profits on a position. There's different levels of pressure coming in price from those activities. So you have to understand those things. And then once it's in motion, it will likely continue in motion until an opposite force comes into play that will propel price in the opposite direction. So these are some of the principles that we deal with here at the school and we teach. And this is how we are able to determine price direction. Look at the bearishness right now as we are speaking. And this is leading into NFP. Okay. Coming out in a few minutes. Again, let's go back to the euro. See the bullishness? See that? It's about to remove an institutional supply area. So what does logic tell you? Does logic tell you that the institutions are going to drop price over time? If they're removing a force that was used already to drop price to where? Another force that came into play to push price in the opposite direction. And now price is about to break through that original force that was used to cause price to drop down. What does that tell you? What force is in play right now? Up or down? What pressure exists right now on price? Upwards or downwards? Upwards. All right. So we're seeing that right now, and upward pressure. So what's likely going to happen? Like I said, I don't like to go long when supply is in play. When supply zones are removed, I don't mind going long in the right circumstances. It looks like price is about to remove this leading up to NFP. So, yeah, those are my thoughts. Okay. I think there's a very good chance that we're going to see price continue to the upside. All right. And so NFP comes out in 7 minutes or so. Yeah, give or take. So that's it, folks. I'll leave you with that. I think you are well equipped to understand what is taking place in the markets now and what is likely going to take place. Thanks for joining me. Hope you have a great weekend. Don't get yourself into too much trouble in the markets, and hopefully what we shared with you today will help you with your trading. Okay, and again, have a great weekend. We'll see you on Monday next week. Thanks for your support. Please hit the like button if you thought what you heard today was informative, and yeah, I'll leave you with that. Enjoy, take care, and we'll see you again soon. Take it easy.